All right, welcome back everybody. My name's Austin. Sometimes you find a video like this right here that puts everything into perspective. You see, this is Sergey Nazarov, the founder of Chainlink, speaking at a conference a few months ago, ETH Global. And the 3 separate clips that you're about to watch, I'll play for you, speak volumes on the potential of Chainlink in 2021. You see, this channel is Altcoin Daily. And with every video, we work to demystify the crypto market for the average person, for me, for you. And it was way back in 2019 that we officially put Chainlink on your radar as a top altcoin to watch in 2020. Of course, back then, Chainlink was trading at about $1, $2. Looking at where we are today, Chainlink has more than 10x'd since then. Right now, one Link token, currently in the top 10 of most valuable cryptocurrencies by market cap, is trading at $11.26 per link, per token. I am not a registered financial advisor. I don't know what the price of any coin will do in the future, and neither do you. But for Chainlink specifically, in terms of the use case, it's very clear we have much farther to go. Like always, check the timestamps down below in the description, and let's jump in. First off, real quick, let's define it. What is Chainlink? A beginner's guide. Well, Chainlink works with blockchains and smart contracts, or dApps, on the blockchain. But smart contracts lack one critical feature. They can't read information, data, from the outside world. They can read timestamps, they can read their own transaction value, but that's about it. They need oracles to read that external data. Chainlink has a solution to this problem. A highly reliable, decentralized oracle network called Chainlinks. By allowing multiple Chainlinks to evaluate the same data before it gets used in the blockchain, we eliminate any one single point of failure. Okay, we get it. Definitely a need in cryptocurrency for something like this. But how much value, potentially, could one Link token be worth in the future? Because Link is a governance token. So the value here depends entirely on how much value is interacting with the network, how much utility potential plugs into the network. So, number one use case, pretty obvious, especially as this DeFi narrative continues to grow, is having accurate off-chain price data feeds. But why? Why is accurate external price data so vital for decentralized finance? Watch this.
Now, in our case, once again, what we do is we essentially provide a category of these on-chain contracts, which essentially act as services that enable people to access, in our case, off-chain systems. And off-chain systems are important because in the case of DeFi, for example, you need price data. And a lot of DeFi is driven by price data because it defines what's happening with the underlying assets that DeFi is essentially securing. And so you need an accurate picture of reality. You need a definitive truth about price data in order to know what's happening with assets.
Okay, that was the first clip, short and sweet. And if you're saying, Austin, that was so obvious, what's the point in even showing it? It's to set up the second one. Because external price feed data, that's just the tip of the iceberg. Listen to this comparison from Sergey about the shift we're seeing in blockchain with DeFi today being very similar to the big shift in the internet when applications back then had what's known as composability, meaning different singular systems were finally able to talk/interact with each other. He's going to mention Uber, for example, because it was able to interact with a GPS API, payments API, SMS API, things like that led to massive acceleration in internet adoption. We are seeing a very similar evolution in DeFi right now. Watch this.
And I think the shift was kind of dramatic. I think this shift from we have these closed, monolithic, singular kind of applications that can't interact with other systems at all or easily, to a service-oriented architecture where people built reusable services. And they utilized those reusable services in various configurations. In the web world, that really led to a massive acceleration at the speed and quality with which people are able to build things. Basically, you started to see, things like Uber, various iPhone apps, all kinds of various use cases being built because people were able to compose reusable services in a secure way. They were able to improve those services if they really liked them and put them back out to people. And it actually created this rapid iteration where you had something like Uber basically combining a GPS API, combining a SMS API to message users, and a payments API to pay users, right? And that rapid iteration and the ability to combine reusable services in a service-oriented architecture is what I think led to a lot of the iteration and acceleration in the web world. I think we're seeing a kind of similar evolution in DeFi, where you had more monolithic smart contracts that were more singular in their focus and they were more closed. But people have been able to take the pieces of their DeFi protocols, like the Synthetics protocol, the Aave protocol, the Yearn protocol, and they've been able to combine those pieces into more useful things than any of them would have built individually, right? So you have an ecosystem now of composable, essentially on-chain services in the form of contracts that can be composed in a very secure way, because the scope and the code and the control of any one contract is relatively small, but they all do something useful. And this is where our space is really starting to mimic the speed of evolution that you would see in the web world.
Alrighty. What do you think? Comparing this to the internet, I think that in the year 1999, for example, we had no idea about the Ubers and the other iPhone apps that would eventually be a part of our daily world. Today, in the year 2021, we're seeing that same sort of evolution in DeFi. So what's that mean as a price target, realistically, for Link tokens in the year 2021 and beyond? I want to play you one last clip illustrating the handful of different use cases a decentralized Oracle network could have. Chainlink is great with the marketing, huge with the partnerships on Ethereum. They are also coming to Polkadot, and they're also coming to Binance Chain, meaning huge growth potential out there. So in this final clip, it's about 3.5 minutes long, stay with me, Sergey is going to explain why Chainlink offers not just price feed data, but the utility goes well beyond that. Gaming needs reliable randomness. Sports betting needs accurate external data. Insurance, farmer insurance, for example, needs accurate weather data. Just watch this. Let me know what you think.
Other exciting dynamic that I'm seeing is the fact that we are now driving forward the existence of multiple types of contracts. If we started out by providing market data from tens of different data providers, whether they're running their own Chainlink node or selling data just directly into the Chainlink network, you basically had aggregations of data that were sold to a multitude of DeFi contracts, which enabled them to quickly and securely launch more markets. And we, on a weekly basis now, we're able to enable the launching of new markets, new useful DeFi smart contracts. But this year, we've basically seen an expansion into other categories of contracts. And what we notice is that as we put new categories of data, new categories of off-chain resources, essentially new services that can be consumed on-chain through a contract in the form of an Oracle contract, in the form of a Chainlink kind of representation of an off-chain resource, we see additional use cases kind of coming into existence and getting better. So one of these categories is gaming. In that category, you have randomness, you have sports scores, and you have various other things people basically want to bet on and game around, as well as the generation of NFTs, which interestingly enough then get popped back into DeFi as collateral. And so you're seeing what we've basically seen is a pattern where as DeFi protocols provide more services, and as we provide more services or more individual contracts that can act as services for other contracts, you see a kind of an explosion of use cases, and you see a rapid improvement of the existing offerings to the point where they become more attractive and useful for users, right? We've also seen a lot of improvement in the insurance industry. Like, I'm very, very proud to say that we have crop insurance live using weather data fed in by Chainlinks into a system like Arbol, which is able to determine the weather and automatically pay out contractual outcomes to farmers in both developed economies and emerging markets where they wouldn't traditionally have insurance. And a lot of that is possible because we're able to provide essentially an on-chain service in the form of a Chainlink that provides data, or in the form of a Chainlink network that aggregates data to a sufficiently high level of security to trigger a certain amount of value. Another category that recently arrived using the Chainlink network is proofs of reserve. So proof of reserves basically shows you that an underlying asset is there and that its value has been retained. and proves that to DeFi protocols. And what that does is it allows the use of that asset, whether that's Bitcoin or real estate or gold or a bank account or whatever that asset is, in the use of DeFi protocols.
Very interesting. This could be big. Could be. Nobody knows the future. Because what are the risks? What are some of the potential negatives for investing in Chainlink? On this channel, we'll always give you both the positives and the negatives so you can make the best decision for you. That's why you subscribe. So number one, just know that there is an incredible amount of risk that you take on when you choose to invest in altcoins. If the SEC continues to go after some of these altcoins, claiming that they're illegal securities, that would definitely slow them down. Also for me, as an average retail investor, the other big sort of negative, although it's right out there in the open, is that the company do own a large supply of the tokens, over 60%. That's sort of a silent inflation as they choose to sell onto the market at their whim. Just realistic things that you should know. Now, let's bring this home. I would be very interested to hear your thoughts. Let's sound off down below in the comments. Now, realistically, for me, price projections, what am I thinking? If Bitcoin 5x's to $100,000, maybe a little more, I think it's very realistic that Chainlink gets up to $100, possibly even $200 in this next year. That would be substantial growth in my book. Over these next 5 to 10 years, $1,000 per link. I'll keep you updated. See you tomorrow.